Avinash Gorakshakar, Director Research of Profitmart Securities, joining in with his view on the markets.
Morning. My sense is that this is definitely a buy on decline market because if you look at the broader market, I think there are many companies which have shown very strong Q3 numbers. The management commentaries have also been very encouraging. So I think, you got to pick and choose in this market. I think the broader index may not show a major rise. Although today we could see a positive opening in the early part of the trading session. My sense is, stocks within the auto components, capital goods, real estate, cement, these are pockets of opportunities where any decline could be used as an opportunity to accumulate positions. And I think the markets would now be looking at, some sort of, local triggers, especially on the election side, because earning season is almost complete. And I think markets would now be looking at what is the kind of timeline for the election schedule. So I think markets are now well poised to hear what the government puts out in action, and obviously corporate action has also been pretty solid. My sense is that at least on ground reports suggest that real estate, cement, steel, slowly I think demand is picking up. So I think broader market there could be good opportunities in the large cap. We have been very positive on the large capital goods players, on the cement companies. So I think one has to take a slightly longer term view now because markets have risen very fast. So one has to be selective and the time frame has to be slightly longer. So there are opportunities, but yes, in the short term the markets could be a little bit range bound.
Okay.
Neeraj, first of all, good morning.
Good morning. Good morning, of course.
My sense is Mahindra and Mahindra has always been a stock which has not performed as admirably like other auto companies. And I think, there are many triggers. The company has been putting a lot of effort on the electric vehicles side. SUVs, they have been dominating the market. And I think the current condition of the market clearly indicates that the volume growth pickup is basically very strong in the larger SUV segment. I think product development wise, specifically both on the ICE engine and the electric vehicle kind of product bouquet has been very strong. So I think you're going to see a lot of action in the coming year. And most importantly, I think, of course, the tractor market has been going pretty slow, but the automotive market has been the market where a large amount of volume share, a large amount of profit margins could possibly come in. And I think we have seen a lot of new product development happening. So I think markets should obviously look at now how these, narratives are going to get converted into numbers. I would not be surprised we could see levels of even 1900 or 2000 because fundamentally, Mahindra on a standalone basis as well as on a consolidated basis looks pretty attractive. Even at these levels, I would not be surprised that you could expect a decent risk reward over the next 12, 18 months. Yeah, I think clearly, from a longer term perspective, the value looks very attractive because you're getting a bank which is of a global size. Now the merger has got completed. My sense is, if investors are looking over the next, say, 12 to 15 months, this is a good entry point for a decent amount of risk reward. And most importantly, numbers which came out in the third quarter, I think have been quite solid. In fact, asset quality, loan book growth. I think the only key point which the market was disappointed was on the deposit growth. So I think we'll have to wait for a couple of more quarters, but I think clearly, the bank looks to be well positioned. And I think a lot of traction is going to happen by, cross-selling HDFC Bank's products to HDFC, customers, which I think has not yet happened fully. So that is going to happen in FY25. So I think around 1400, 1450 would be a good starting point to accumulate. I would not be surprised that we could see a good 17-18% upside over the next, say, 12-15 months. And I think the markets probably would get a better sense, from the second half of FY25, when I think some amount of cross-selling happens and, that narrative which earlier was mentioned by the market gets converted into numbers. But I think the management commentary has been very solid. They have been very positive on the, overall asset quality, loan book growth. I think deposit growth is one thing which I think is not only impactful for HDFC Bank, it's across the industry. Deposits are now going to get more and more tougher. So I think we'll have to wait and watch. But yes, I think one can definitely look at accumulating, HDFC Bank at the current level. No, I think, Neeraj, I would be more constructive on Indigo, considering the fact that, this data point on market share slipping to its lowest level. I think we need to wait for a couple of more quarters because aviation traffic, according to me, is actually going to get more and more better with the kind of buoyancy we are seeing in the hospitality, hotel segment, and most importantly, business travel has resumed quite well. So my sense is, but the biggest trigger for them is that crude prices have softened quite well. And if crude remains at these levels for a reasonably long time, then yields are going to get better. Their capacity utilization has also been pretty high. So I think if crude prices remain soft, I think you'll see a decent amount of profitability coming to Indigo. I would not be negative on the stock as of now. I mean, investors who have the stock should hold on. The stock has moved up, so there would be some amount of consolidation. But if you're looking at FY25 numbers, I think definitely, the company should do well. I would think, players like Vistara or typically, the other players like SpiceJet, they have the size and scale like Indigo. With a 60% market share, I think clearly the bigger beneficiary of the crude oil price cut would obviously come to Indigo. And next 1 or 2 quarters, I think hopefully, I think things should look better. So I think one bad number on the market share should not lead to a complete derating on the stock. I'm pretty positive that the stock could bounce back, and I think you could see better numbers for the March and maybe the June quarter, forthcoming. Go with IOC as Bush mentioned, because see, the numbers have been pretty solid, and oil marketing companies, according to me, would be the biggest beneficiaries of the softening in crude prices. I think both the auto as well as the aviation sector, according to me, the throughput has increased significantly, and I think that is going to be the key trigger for them. Of course, the near-term, short-term caveat is that ahead of the elections, we could see some sort of price cuts being announced by these companies on petrol prices, and that possibly could have a short-term negative impact. But I think around 180, 190 IOC could be accumulated. I would not be surprised that the next 2 quarters, hopefully, if crude prices remain soft, you could see levels of at least 230, 240. So, of course, the election, news flow is important. But fundamentally, this is one of those companies which looks relatively, attractive as compared to both BPCL as well as HPCL. Neeraj, we've already discussed this talk earlier on your show. We continue to like Anant Raj, from the real estate pack. I think the third quarter numbers which have come out have stood out very strongly. In fact, now the data center capacity has gone up to 21 megawatts from 6 megawatts. So you could see a significant amount of traction in the coming financial year. And I think profits were up by almost 45 to 50%. The EBITDA was up by almost 55 to 60%. I would not be surprised that over the next, say, 12, 15 months, as the data center business gets scaled up, there is definitely, it's a very sweet, profitable business, enjoys a EBITDA margin of almost 65 odd percent. So, you could assume that next year possibly we could see a top line of 200 crores coming in only from the data center business. And of course, the real estate business remains the cash cow. So I think technically speaking, we could see levels of around 230, 240 crores profit for the current financial year from last year's 150 crores. And for FY25, we are looking at a profit of almost 330, 340 crores. So I think very strong earnings growth. And plus, they recently made a preferential to some marquee investors. So, that means that the stock is now in strong hands. So I think one could look at levels of at least 400, 425 over the next, say, 12, 15.